Okay, this is a daily review for Friday, April 11th. This is NQ on TradingView, 1 minute candles. This vertical line is 9:30 a.m. when the market opened. I highlighted a few spots to make this faster to go through so you don't have to wait for me to be thinking on what was happening. So, as you know, I don't like to trade the first 30 minutes. Too choppy, and you can see here, very choppy. Where would I have gotten in? Well, I love this big buy volume here. Wave trend looks like we're going up. So I like this. It comes back down to the, I'll show you, we've got two things going on here. We've got the EMA, that's this yellow line, and that's EMA 21, and we've got the Bollinger Band, and that blue line is the SMA 20. So price went up and then came back. So as you know, I don't like to jump in at the tip as price is moving up because we don't know when it's going to pull back or how far it's going to pull back to. So I wouldn't get in here. However, it comes back to the EMA 21 here, and I like this. It goes down and it starts going back up. I like the buy volume. We're going up here. Our squeeze momentum is going up as well. Despite the dark dots here, I like the white dots when it looks more like price is trending. However, where would I have gotten in? Well, I like it went down, started coming up. As it goes above this candle with some momentum, I'd try to get in here. And this this position was 50 points take profit, 10-point stop loss. So you see, you can easily have made it 50 points quickly there. Now, could we have done better? Well, sure we could. We could have gone up. You know, here's more than 100 points. This is 150 points there. So if you would have hung on, where could you have gotten out? Well, I don't like this this long candle coming down, making a new low here. I would have got out right about there. That's 92 points, so that's excellent gains. If you had the balls for it, price stayed above EMA 21 here. So as long as it's above EMA 21, price is probably going up. So you could have hung on to right here as it breaks down through the EMA, the SMA, and the EMA 21. So if you would have got out, it dropped down hard, but if you would have got out there, that would be 75 points. But nonetheless, it was 50 points. What you don't see here is, you know, when we look at the candles like this, is you don't see the chop. Price was moving up and down a lot here, and I was using a 10-point stop loss as I always do. So it's easy to get stopped out. You know which way price is going. We see our oscillators down here showing us which way price is going. I love the bright green candles as we're going up here. But nonetheless, I got stopped out at least once, maybe twice, trying to get on this trend going up. You know, once you're on and you have some profits, then it's easier to hang on as prices move up. At the beginning, sometimes it's tough to even get in. So what I'm saying is, it's okay to, if you get stopped out, if you still think it's going up, it's okay to open in, because sometimes, some days, it's just choppy, and Friday, April 11th, was one of those choppy days. So where else could you got in? Well, there's price was consolidating here, and if you're someone who likes to take on some risk, you could have tried scalping the range here. So this is again a 50 point, oh here, let me fix that. This is a 50 point take profit and 10-point stop loss. So if you would have put, you know, tried to put a limit order to go long at the bottom of the candles here, you wouldn't be able to get 50 points, but you could have got 40 points. You could slide this down and say, you know, there's 40 points there. So you could have got 40 points if you like to scalp the range. I don't usually like to do that. What I like to do is I like to get the breakout. So when price is ranging like this, and it was only for a few minutes, it wasn't that long, then people start going long, thinking it might go up, and they'll put the stop loss down below the candles here, or they might be thinking that price is going to go down, and they, you know, go short with their stop loss right behind the candles here. So and further, there's people like me that like to get the breakout when the price is breaking out with momentum. So they put some orders down here to go short, or they just try to time and press the short button as it goes down, and that means there's a liquidity here. There's people wanting to go short, whether it's the people that were long and they want to get out, so they have their stop loss order, which really is a order to go short here, and the people expecting and hoping it'll break out downwards. So, and sure enough it did. So where would I get in? Well, I like the cross here. This came down very hard, so I don't like to buy the tip as I said, but price pulled back hard to the EMA, past the EMA 21 to the SMA 20 here, and I love that. So as it comes back down, I would try to put an order in at the EMA 21 to try to go short, and that's a 50-point take profit. So that was an easy 50 points there. Could you have gone down more? Sure, you could. You could have got 90. You could have even got 100 points if you want to take on that risk. But there's nothing wrong with 50 points. 50 points is a fantastic win. Price came down, and then what do we see here? The sell volume, great sell volume here. We can also see in the candles, but then the sell volume disappeared here. And one thing I like to look for as well is in this wave trend oscillator on the bottom, when price it goes right up to the top here, when we're at the above 50, or if price is down here below 50, then this is, they say, overbought, or this is oversold. So often when you see a dot here, that means we're crossing back down or crossing back up. Now that's not, you can't take an individual signal to say go short just because you see it, because sometimes, like right here, the dot appeared and it didn't go down and went up further. But this is one of the indicators we look for. We also see squeeze momentum, looks like it's going down, and then we see the buy volume spiking and going above the dead zone line. So this is a good indication that price is going down. So when it pulled back like this to the SMA 20 past the EMA 21, I love this. This is a great lower risk entry. But then our sell volume disappeared here, and I wouldn't do anything yet. I like this pullback to EMA 21, so would I go? I might have gone short right there. So I'm going to add a short just to see how that would have looked, because I like to go place orders when it pulls back. So if I would have got in here, yeah, I could have just barely gotten 50 points right there if I could have timed that perfectly. But if I didn't, it pulled back hard. I would have moved my stop loss up into at least break even, if not into some profit there. So even if I missed that perfect, if I timed this a little later and my entry was a little lower, I would miss that 50 points. When it pulled back, I'd make sure to get out at break even before this big gigantic candle jumps back up. So now what do we got? Price broke through and then pulled back to the SMA 20. Didn't quite get to the EMA 21, but I like this. I might have tried to go short here long here on this pullback. If I did, I would have got stopped out. No, I would have got 50 points right there. You could see if I would have timed that perfectly. If I was a little bit late getting in, then I would have missed that, but I would have moved my stop loss up to break even, so when it comes down hard I would have not lost money, so that would have been fine. So now we break down hard below the EMA 21, and what do we see? With this wave trends right in the middle. So I don't like it when it's in the middle. I prefer when it's up here or down like this. But we break down through EMA 21, pulled back a bit. So would I have gotten in here? I don't like to buy the tip. I like to buy pullbacks. So where would I have gotten in here? Now I like this sell volume. I would have, when it pulled back here, I would have put a limit order to go short just below the previous candle. So let me fix this, and we'll say this is 200. 200 ticks is 50 points, as you can see here. So I could have easily made 50 points, but the sell volume was going hard, and our wave trend shows we're going down. So I might have removed that take profit to see how far we can go. So how far could we have gone? Well, if we just hung on, we could have gone all the way to 150, me scroll this up a little bit. Yeah, 160 something. We could have got 180. But you can't time it perfectly. So where would I have gotten out? I would have hung on. It would have pulled back. So as it pulled back here hard and it went above this previous candle right here, I would have got out right there as it broke above. So that would have been 85 points, but you could have hung on further. Price was staying below the EMA 21. It came back down, so you could have been back in that 150 plus point range there. I would just for sure have gotten out as price broke above the EMA 21. So if I would have really hung on and say right here, that's 50, we're back to 50 points. So instead you could have just did this low risk 50 points, got an easy 50 points and not worried about the rest of that. It depends on your risk tolerance. So now price broke above the EMA 21 and then it pulled back the EMA 21, and I love this. So I would have tried to go long here. So that was an easy 50-point win because I like the buy volume here. I like the wave trend, shows we're going up. Squeeze momentum says we're going up. These candles look bright, and so I might have even removed the take profit and then see where we can go. So where would I go? Well, price is going up hard here, and then it breaks down hard here. I probably would have got out right here as it broke below these candles. So where is that? Let's see. There. So that would have been 91 points. So let's see, our buy volume disappeared and it's pretty dead along here, so I would think I wouldn't do anything as we watch it just chop around here. And luckily I didn't, because look at this big spike up here. That would be well, if you're long, which is unlikely because you're below the EMA 21, then that would be fantastic for you. But it happened very quick. Went up and came down. This is a 1 minute candle, so that's within a minute. So mostly people trying to go short here will get stopped out. Luckily, I wasn't in here. However, I liked it when it came back here to the EMA 21 and started coming down below these candles. I might have tried to get in here, go short. It's not exactly, the order wouldn't be exactly on the EMA 21, but we're coming down hard here, so I might have tried to get 50 points here, and I could have got 50 points there. But it pulled back hard, so I would have moved my stop loss to break even so I didn't lose money if I hung on to it and it came back here. But that's another easy 50 points. And then what was I doing here? So, oh yeah, this is the pullback for the it's back to the EMA 21 again. So if I would have put after it passes, if I put a limit order to go short, if it comes back down, I could have went down for an easy 50 points there. And I think it's similar for this one. So price came back to the EMA 21, it passed through. I could have put a limit order below back on the EMA 21. So when price came back down, it gets me in, and then it's a quick 50 points in probably a minute. And now we're going back up. Price breaks above the EMA 21, and I like the increasing buy volume here, and wave trend says we're going up. Let me fix this. Sometimes this Lux Algo sessions moves. Just paint above. Oh, that didn't work. Let me try that again. Paint above. Oh, there we go. Okay, so prices broke above, and I like this pullback to the EMA 21. I would try to get long here. So that's an easy 50 points. But I like the buy volume, I like the direction. Squeeze momentum says we're going up. Lots of good things about this. So I might have removed the take profit and just see how high we go. So let's see. Price is moving up and then it comes down here, but not below the previous candle. Here a little bit below. So yeah, I might have got it here. And then I see that squeeze momentum looks like price is going down, and we see this cross here. I'd probably be getting out right about here. So let's say I did that. Let's move my wrong one. Let's move this take profit higher, and we'll say right about there. So that'd be 83 points if I would have hung on to right about there. However, if you have the risk tolerance for it, the price didn't cross back through EMA 21, So although the indicators shows that the buy volume is slowing down and we might be going down, if you could say, you know, my strategy is just to hang on until price crosses back down through EME 21, well, then you could have did really well. Let's see where this goes. Cross right there. So let's pull this up and see, get a close there. That's 180 points if you could hang on to it for that long. I don't think I have that risk tolerance though. When I see the oscillator showing it's going down, I see some sell volume here, and I'd be one to capture those gains. But that's just me. That's my strategy. So here, I like that price crossed down through EMA 21 and then it pulled back to the EMA 21. I would try to go short here, and I could have got 50 points just barely. So if I timed that, you know, a little bit wrong, if I put my short limit order too low, I would have missed that. But, you know, that's 50 points. So once we got into, you know, above 20 points, say 30 points, I'd move my stop loss to break even so I wouldn't lose any money because it came back up hard. And then would I have gone short here? Well, I probably would have. See, you got the red sell volume here. We might still be going down. I don't have a lot of indications we're going up. So this pullback to EMA 21 could be going back down again. Although the moving average lines are flattening out, that tells me that maybe we're going up. It's a little risky to go down, but I might have tried that. So if I went short here for the EMA 21, I would have got stopped up pretty quick. Probably would have lost 10 points. But it's okay. You know, if I'm doing 50 points of take profit and 10 points stop loss, that means I can, if I get one win from one of these, I could lose the next 5 in a row and still be break even. So once in a while, when I get this wrong and I get stopped out, it's no big deal because, you know, I just had a whole bunch of good wins before that. And we got some good wins coming up as well. And that includes that sometimes price is chopping, and price was choppy as it was moving up. You can't see in the candle here, but price was moving up and down. And sometimes you put your order in and then price jumps up, and, you know, 10 points is pretty tight. It's easy to get stopped out. But like I said before, I like to limit my losses. It's not hard to recover from a 10-point loss, especially when you're doing 50 points to take profit. So now price broke above the EMA 21. And I wanted a pullback. I didn't get a pullback. I got a tiny pullback here. So I might have put my order, my limit order, to go long above this previous candle. So when price goes down, when it comes back up above, then, you know, my hope is it's going to keep going. That was the end of the pullback, and sure enough, it was. So there's 50 points. Could I have gotten more than that? Sure, I could have got 80 something points. And price pulled back a little bit here, but then it went sideways for a long time. So if you waited for price to cross back over the EMA 21, then you would look more like 82 points, which is fantastic. And, you know, that's better than the 50 points I would have got from, you know, just that simple one there. But this is safe and easy to get. And then I didn't like this. It was just price going sideways. It's just chop city here, and I avoid that because on the Wada Atar explosion indicator down here, you see the volume is low. So this is a good time to sit out. We see some crosses here, but price is not moving back down. We're at the overbought area, but price is not going down until right here. And we see squeeze momentum is already saying price might be going down. And then here we see the sell volume kicking in. You see a bit of space between from the lines here in the wave trend. So this, I'd be looking for shorts here, but we're above the EMA 21, just going sideways. We come down here, I might have gone short here, but it didn't pull back very far. I might have said, okay, it pulled back a little bit, maybe I'd go short right here when price came back down below. So if that's the case, I would have got stopped out, you know, very quick, in less than a minute. How far down did it go? It went, it's hard to see there. It was only 20 points, so I probably would have lost 10 points on that one. Then price came back up, passed through the EMA 21, went all the way to the SMA 20. So if I was trying to scalp here, I could try to go short from the top of this range and go down, but I would have got stopped out very quickly here. It's dangerous to do, you know, as price is going sideways here, it's dangerous. So where would I here? Price went down, pulled back to the EMA 21. I might have tried going short right here, and that would have been fine. Price pulled back, almost got stopped up, but I would have hit my take profit right there. The moving averages are moving now downwards. We're on a downtrend, and you can see that here in the wave trend as well. I don't like this squeeze momentum. It's very flat here. But if I want to do a trade, then that was pretty good. Here's another pullback to the EMA 21, so I might have tried to go short there. Let's drop that on. If I go short from this EMA 21, so that would be an easy 50 points. Right there. I could have hung on for, there's 100 points. I could have got 100 points if I could, just move my take profit to 100 points. When it moved over to here. But let's say I just got those 50 points and I just hung on until I see price pull back to the EMA 21, but I don't just blindly take a short here. I see that we hit the cross dot here at the wave trend that we might be going up. So when I see price pull up to the comma, I might be coming back down again. I mean, it might be going back up again. So it went up and continued up, broke through, didn't come down at all. Would I have gotten in here? Well, I like this buy momentum. I like the cross here as we're going up. So when price pulled back a little bit, I might have tried to get in with a limit order to go long right above this candle here, and that would be an easy 50 points. So if I missed that because it happened too fast, it happened again right here. So I could move this limit order to say right above this candle. When price pulls back down, as it comes back up, my limit order triggers. I could have got 50 points here. So could we have gotten more? Sure, we could have. There's 100. That was 150 points. If you just hung on this up, and you could have had 150 with your take profit, 150 take profit. But where would I have gotten out? Price came down here. I would have got out as it made a lower low right here. So that would have been right about, if I wasn't using take profit, I would have got 100 points right there, which is a fantastic gain. But if you have the risk tolerance, price came down, didn't cross the EMA 21, had this big rejection wick back up, and then continued up. So if you hung on until the EMA 21 price actually crossed the EMA 21, which is right about here. Oh, it didn't even cross it. Wicked it for a while before coming up and then crossing here. So let's pull this over. So you could have got more than 100 points if you just hung on, if you have the appetite for that. And we're getting near the end of the day now. 2 o'clock. Price is getting choppy through here. Did I see anything? I don't think I saw anything because these are the two moving averages, SMA 20, EMA 21. They're just going sideways, parallel, nothing really going on here. There was some sell volume, but price wasn't moving down enough to get in. Okay, here we got some separation from the moving averages, and price goes down, it pulls back to the EMA 21. I like this. I could have tried to go short here. It took 5 minutes to hit that take profit, 50-point take profit, but that was a win. Then we go back, and now we're just hugging the moving averages. We don't like to get trade when price is caught up in these wires, so we just hang on, we just watch, and price is up and down, and here we go up above with a little bit of a space, pulls back to EMA21. If I had the appetite for some risk, I might go here. We see squeeze momentum going up, we see some buy volume, the wave trend looks like we're certainly going up. So as we pull back to EMA21, I could have tried to go long. Would I have gotten 50 points? Well, almost with this one, but I wouldn't lose money. As the price went up close here, above 30 points, I'd move my stop loss to break even, so I didn't lose anything. So as price came crashing back down very quick here, I would be stopped out at break even. And now we're below the EMA 21. We're only looking for shorts, and price pulls back to EMA 21. Would I go short here? I might. It's a little flat, but if I did, I could have got 50 points. But realistically, I don't think I would. It's to Price is caught up in the wires here. And that's about it for the rest of the day. You could see a bit of an uptrend here, but it doesn't go up that high. The buy volume is decreasing. And here we got squeeze momentum starting to go down. Wave trend might be going down, buy volume decreasing. So it looks like it's going down, but it doesn't, goes back up. And instead, the moving averages are overlapping and price is getting caught up in those wires. There's really not a lot you could do here. You could maybe scalp 20 points or something, but really I don't think it's worth it. We made lots of money early on. It's too easy to get stopped out when volume is low and price is flat. So I would just call it a day. I don't like to trade the last half hour. Usually it's too choppy. Here it's not too choppy, but it's flat, it's barcoding, and I think it's just not worth your time. Too risky. And that's it. Of course, Margot Robbie could tell us live trading is not as easy as backtesting or analyzing the price action of a previous day. It's easy to look back and see what we woulda, shoulda, coulda did, but what's the point? Why do we do this? We do this so we can learn. It's easy to analyze the price action and learn what to watch for. What are the signals to get in and get out? That's the whole point. It doesn't take much time. It doesn't cost you any money to learn. I think of it like going to the gym or going to the dojo to practice your martial arts. So when it comes to time when you need to actually use it, then you're ready. You have that practice. You know what to look for. You've got the skills.